Greetings everyone. Let's talk about cost of goods sold a little bit further in this video. Cost of goods sold is the money you spent to be able to sell the goods. Now this formula, which you would remember from my previous video as well, is calculating the purchases you made for that particular sale that you did in that period. So purchases plus opening stock minus closing stock is going to help you in calculating the purchase price for the goods you are selling. In COGS, there are some other direct cost which needs to be included, like purchase freight. To remember what expenses you can include in COGS, the simple logic is, what did you spend to be able to bring those goods you're going to sell into your shop or the warehouse? So all those direct costs involved in bringing the goods under your control to be able to sell them will be included in COGS. And as explained earlier as well in my previous video, if your revenue is coming from selling services, then COGS will be direct cost of your payroll staff who are helping you in performing those services. Now let's talk about this COGS formula a little bit more. Purchases plus opening stock minus closing stock. Why do we use this formula to calculate COGS? To understand that, let's think about what basis we prepare our accounts on. We use accrual basis. It means that we have to match our revenue with the expenses. For COGS, it means that you cannot claim the purchases of the goods which you are going to sell in following year. Or in other words, you cannot claim the purchases for the goods you did not sell in that period. How will you calculate the purchases for the goods you have sold into that year? That's where this formula comes. So when you think about the stock you had in your hand at the beginning of the period, plus the purchases you made, minus the stock you had at the end of the year or that period, is the goods you sold during the year. This is a simple math problem solving equation or problem solving question. Let's talk about this as an example, Let's talk about the simple example. Jane Smith had 1,000 chocolate bars in her stock on 1st of April 2021. During the year, she bought 40,000 more bars. At the end of the year, she had stock left of 1,500 bars. How many bars did she sell during the year? So her opening stock was 1,000 bars. 40,000 she bought more. 1,500 she had with her at the end of the year. So she sold 39,500 bars during that year. Very simple math question this is, and this is how you will calculate COGS for the sales you made during the year. Opening stock plus purchases minus closing stock. I hope it helps you in understanding COGS a little bit further. Any questions, please write down in comments and I will try to answer those very soon. Thank you very much.